please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, it's 17 up on the Nifty, now 16, 14 up on the Nifty, 12 up on the Nifty, 13, 12, 13. Okay, so 11,155, 160 is the opening. And for Sensex, it's 36,890. 888 thereabouts, so about 50 points higher at the opening. Very, very marginally higher. Bank Nifty has already gone into the red, 1/3% lower, and that's Yes Bank, which is again in the red. Well, actually, even that is flitting rather rapidly. The oil marketing companies are taking it on the chin, as it were. That's the one. So let's come to the Nifty itself. Now it's moved into the red, the Nifty. The mid-caps are just holding on to the green by the skin of their teeth. Actually, it's red all over. Now the Nifty Bank has slipped into. So the green stayed for practically 10 seconds. And the Nifty Bank is now down 1/3%. So just to quickly read the losers in the Nifty, and that's a large list. Maruti Suzuki actually is leading with 1.5 down. So it looks like people are trying to take money where they can. The oil marketing companies have been trammed now because of $80 and 72.5 on the rupee. Bad combo, 90 rupees for petrol in Bombay. So it might look like, you know, politically it will be difficult to manage here on. So you can see them giving up their gains. Even Bajaj Finance is down. So marquee NBFC stocks are also not really doing too well. Bajaj Finserv, M&M, all of them in the red. Let me see what's the Green Brigade looking like. Pharma stocks. But Indiabulls Housing is now up 1.2. And then there are only pharma and tech stocks that are in the green. There's pointless reading any of them because everything is flitting very rapidly from green back into red. Now 1/3% down on Sensex and Nifty, and 0.7 down on Bank Nifty. Mid-caps also very bad.
Yes, very, very weak opening. It's down 100 points on the mid-cap index. The advanced decline ratio is veering towards the declines. It's still slightly in favor of advances, but it could go either way. Banks are actually getting hit quite hard. By the way, Yes Bank is now down 4%. It's lost a lot of value just in the last 5-10 minutes. NBFCs once again continue to, you know, see lower ticks. So you have PNB Housing Finance, there's Crude Finance, Bajaj Finance. The whole lot is down about 2 to 4%. Central Bank of India has a big downtick going for itself this morning. Central Bank of India now is down almost 20% and big volumes as well there. I don't know if I missed something, but there's actually a big gash on Central Bank of India. Keep that on your radar. Muthoot Finance.
See, Central Bank is one of the owners of IL&FS, but they are in PCA. They are not going to be asked to put share, you know, money. So I don't know what is the fresh negative there.
Okay, so we'll track that one closely. But for now, it's seeing big volume and price pressure. You have real estate stocks that have suddenly come under pressure. So, you know, the likes of Oberoi Realty, even the best of the lot. Aviation stocks under pressure because of higher crude prices. Interglobe Aviation is down about 2.5%. Higher crude prices impacting a lot of companies like Pidilite, etc., down about 2% over there. And, you know, just routine profit taking also is what you're seeing, even in some of the good quality names. So keep an eye on that. Now for the index itself, 11,100 just about holding by the skin of its teeth. On the gaining side, DHFL is up almost 20%. So volatile moves all the way. Cipla is up about 1.5%. There's news flow there. Biocon has news flow, so up about 1.5% there. It's largely the pharmaceutical names, tech names like Infosys, etc. But otherwise, it's really volatile. I mean, the last few minutes all over the place.
Yeah, nothing normal about this market, Sonia. Obviously, look, the first gap up gets sold into in a market like this. You know, too many people who want to sell. The mid-cap market, I think, is interesting because you straight away have a you know, a 230, 240 point decline on the mid-cap market. The Bank Nifty also down 150 points. Indiabulls Housing is beginning to fall, by the way. Let's see if the others also follow. But Ashwini, your thoughts on market opening and any interesting trade here?
See, this is perfect foil for shorts. You know, minimum confidence in the market. Crude is going up, rupee is falling. I mean, on what legs do the bulls stand on? So my sense is that we will again see selling. It's just early morning volatility, and I think the banks will come down fairly hard. So this is the time where you get short back on the financials. Don't worry about 2-3% rallies. They'll just get taken out in a hurry because there is, you know, almost no leadership now available. And if, you know, once mid-cap start to fall apart, It's only a matter of time once, large caps also follow. And anyway, we are expensive and, foreigners are selling, etc., etc. So this kind of, pressure and lack of confidence will only have lower levels. The idea should be to get short on all sorts of rallies, at least on financials. IT, etc. may move up a little bit, but they will not be able to protect the market.
Okay. Sudarshan, anything that has moved into your radar now, long or short?
Well, the Nifty, again, I'm repeating, buy 11,100 October puts and hold fast because there will be a lot of volatility, but you'll make money in this trade. That's a trade for positionally. For the day, markets will be very choppy. Apart from pharma and IT, which is TCS, I can't think of any other stock.
Yeah, in fact, TCS is moving up now and supporting the market a tad bit. At the moment, it actually hit a new high, TCS, today. So 21.24 on TCS, and volumes are picking up. Mitesh, in TCS, Infosys are all sort of bucking the trend. Any trades that you would advise there, and anything at all?
Mitesh, we can't hear you.
I think the rupee depreciation clearly helps the exporters, and IT stocks are at the forefront. TCS, I think, still looks like is expanding on the upside, so keep a stop below 2100. Look for targets close to about 2185, 2190. But I think broadly the market slightly remains weak. Apart from IT, I think the sector which can be explored is Oil Twins. Oil India and ONGC are looking good, and Oil India was also a recommendation on Friday, so there you can go long. But stocks like DLF, I think cement stocks are all clearly looking weak, and I would explore shorting opportunities over there.
Okay, the market's weak, make no mistake about it. 212 down now on the Bank Nifty, 300 down on the mid-cap index, and the Nifty is again down 33 points. Ashwini, what's the big call for the day then?
Well, forget about the rest of the stocks. Just get short on financials and Bank Nifty. I think there is more to come. I mean, there's a lot of financial stocks and portfolios. They need to come out.
Okay, well, the entire PSU banking lot is now getting hit. Not just Central Bank of India, which is down about 20%. Allahabad Bank is now down 5%. You have others. Bank of India is down. Union Bank. Sudarshan, you've been talking about how, this is a space to go short in. Anything that you would do afresh after seeing the fall in the PSU banking names?
Yes, I see all the ones which are having FNO, entities are short sales. Two names, Can Bank and Bank of Baroda, both are short sales. They are not for the day, they are not for the faint-hearted, but there will be significant declines over the month, October.
Okay. Is there any fresh trade on Yes Bank, Ashwini?
It's kind of trying to act brave, but I think this will also come under the hammer. Just Yes Bank cannot keep going higher, but definitely there is more downside, and people can still attempt shorts on Yes Bank.
Okay, the other space where you're seeing selling is now the NBFC space, which was holding out till now. For example, Muthoot Finance is now seeing selling pressure. L&T Finance is the one where you're seeing some kind of selling pressure right now. For, of course, this market chatter that L&T Finance was one of the L&T Finance entities was the one that was the buyer for that DHFL paper when DSP sold. So,
but the biggest loser now is actually PNB Housing.
Yeah.
So I think people are just wanting to lower their portfolios, or maybe it's just trade loss, stop losses getting hit, or a mix of both. But PNB Housing, IRNFS, of course, Repco Home Finance, Indiabulls Ventures, Gruha Finance. I mean, that one, it always commanded tall valuations. That also is 4.5 down. Capital First is down 4.5. Magma FinCorp, Repco. ICICI Lombard. So really, finance, as Ashwini says, no favorites at all in that sector. Any other fresh view, Mitesh?
Yeah, Lata, I think a few more stocks have broken down, and I think Sonia was highlighting PSU banks, and Allahabad Bank looks like it's heading towards 32, 33. But I think Adani Ports is just breaking below the key support levels of 360. So if it declines by another rupee or two, I think then 361 could be a stop loss, and you can take a short for targets close to about 340.
All right, gentlemen, we leave it there for now. Thanks a lot. We, of course, will keep coming back to you. Today looks like that kind of a day. For now, Andrew Holland, CEO of Avendus Capital Alternate Strategies, is with us. Andrew, good morning. I think this is a time that you can say I told you so. I mean, whenever we have had discussions, you said this NBFCs and this couple of finance companies you would never touch. But your thoughts on what's going on right now?
I think there's obviously a lot of scare and there's a lot of rumours going around, and you know, on the one side, and I'll ask Latta the question as well, is I don't remember the RBI and SEBI putting out a joint statement before, but I could well be wrong. So on the good side, you can say, well, that, you know, calm the markets. On my more sceptical kind of viewpoint, it tells me maybe these things are a little worse than we're thinking for them to make such a joint statement. You know, I think the problem is probably within the mutual funds in terms of, you know, where the selling might have to be here if they're getting more and more redemption. So I'm not saying underlying is something wrong with the NBFCs, but obviously they're going to get hit. And because of all the different rumours of what's, you know, what's unfolding around us, you know, until there's any kind of clarity, you know, in terms of the selling or where the mutual funds are, I think it's just going to be counter rumour. Some on the good side, some mostly on the bad side. So I think it's just a sector you just have to steer clear of at the moment, wait till the dust settles as usual, and see where the bargains are.
Would the bargains come in some of the... Okay, good morning, Andrew. You know, the Reserve Bank and the regulators have made these noises in 2013 and 2008. So in a moment of extreme scare, you expect them to say something or do something, and that sometimes helps. We'll have to wait and see if this ruse works and it prevents people from going and seeking redemptions in mutual funds. I assume that that's what they were trying to do. But be that as it may, would you want to at some point look at good bargains in the NBFC space? I mean, companies like, say, Bajaj Finance, who have always been managed to finance themselves with the rights issue and then come up looking brilliant, or Sundaram Finance, simply because of the risk aversion, are they actually likely to get money cheaper?
So I think there's a few things there. Is that, you know, unfortunately they'll all get tarred with the same brush in the initial kind of you know, sell-off. So it depends on what price they fall down to. But yeah, the quality NBFCs is definitely where we'll be looking at for our kind of entry points. If they actually hit them, but obviously that's going to be you know, quite a large kind of downward shift because they're all pretty highly rated, as you're well aware, albeit some have come off a lot more. So you know, it's not a sector to rush in because valuations have become so attractive at the moment. So you know, unfortunately, we just have to sit there because the rumours are too much, and you get whipsawed too as we saw on Friday. So you know, just sit back and watch a little bit. And see what entry points you want to go in. But those are, you know, the quality NBFCs are the ones where we'll be focusing our minds in terms of what the entry points are.
Okay. Andrew, hi, good morning. So you said that NBFCs is not a sector to rush into, but what about investors who already have a, you know, a decent exposure into this space? I mean, there are now talks that some of the housing finance companies are facing liquidity issues. They've defaulted on their scheduled payments. We've not heard of any of that, but of course, there is a lot of rumor mongering going on. How do you, as an investor who perhaps holds some of these even good quality names, how do you tackle these noises?
So you don't. You just let the noise go on until you feel. I mean, you obviously have identified. You'll speak to the management of each of the NBFCs or housing finance companies which you think are quality. Make sure that liquidity issues are not for them. They'll be tarred with the same brush. That's fine. And again, you go back to your entry point. So you know, sometimes it gives you the opportunity to pick up your quality again, but. You know, when you know, you've just said it's all about rumours at the moment. So when the market's like that, you just better just sit on the sidelines and then, you know, have your fundamental companies ready to buy if they hit your target prices.
Okay, by the way, look at Bajaj Finance now.
Exactly,
almost 5% lower on Bajaj Finance. So, you know, when you have Bajaj Finance down about 4.5%, you know, it's smacking of some serious problem in the NBFC space. So the other NBFC rally always will remain vulnerable. There are a lot of stocks which are seeing, of course, intraday bounces. But anyway, let's see how things move from here. And to the other talking point has been Yes Bank. your thoughts on this issue, and whether, I mean, if you want to comment on whether as a stock it's now attractive?
Again, without talking on the stock individually, I think the fact is that we don't know any of the reasons why it happened, because the RBI don't spell that out to us. In fact, probably most regulators don't. But that just lends itself to more and more rumours. So until Yes Bank management themselves come and say something about what they think or what the situation is, you're going to be hostage to that. And that's where the problem lies, is that you're sat in this vacuum of not knowing what is right and what is wrong. So again, it's one of those things, you just sit on the sidelines, have your target price, and see if anything is available at that time. But I think sadly, for one of the bigger banks, there's just a lack of clarity, and that will spread it all along by itself.
Yep, fair point. Actually, let's move away from financials. We have forgotten the older problem we had. We had a problem with macros, with crude, with rupee. And today crude is edging 80 and the rupee is 72, the dollar is 72.5 rupees. Andrew, how much can this scream off from the market? Do you see the Nifty getting supported at 11,000, 10,500? At least is the downside protected?
So I think you're right. It's the macros which are scaring, and obviously, crude at 80 is, with the rupee where it is the equivalent of 95, or we're getting towards that 100 level. And I'm sure if I would have asked you 6 months ago, Lata, what would you think the rupee or interest rates would be if the oil price was the equivalent of 100, and you'll be saying a lot worse than it is today. So I think interest rates are going to be continue to be pressured upwards in the very short term. I think the rupee is going to be pressured down in the short term, and that just causes its own kind of problems for India Inc. Will the government come in and step in? I think they probably will at some point, and that will probably be the point where the markets will then reassess of the actions they've taken and whether that's going to help stabilize the currency and interest rates in the short term. So if I was to have a guess of where the market would fall from here, I think there's probably another 5% fall on this basis, given what we have in the financial sector, given what you're seeing with the rupee, and given what you're seeing with crude prices. So that's a kind of perfect storm for markets to fall, actually. But the one thing I just want to say, Lata, is that, and I think it's not just an India thing, it's a global thing, is that we've all forgotten what pressures interest rates being hiked really means for companies with debt.
Yeah. That point is taken. For the market, just keep an eye out on the mid-cap space. It's down more than 1%. I mean, it has been under pressure through the course of the morning, at least up until now. But a lot of fresh stocks getting added to the losers list. Motherson Sumi is down almost about 4% Cholamandalam is down about 4% Interglobe we spoke about earlier. Crompton Consumers has lost about 4%, so not looking good for the non-index large caps as well. Andrew, the only hiding place so far for investors has been IT. Through the course of the year, IT stocks have done well, and even this morning, TCS has hit a new high. You think there's still some money to be made here?
Well, I think our strategy has been to hunker down in the last 3 months. It's not been something that's been kind of helped us in the past few months, because it's been, I would say, less quality index stocks which have moved the Nifty higher. So that was also in itself a bit scary. But hunkering down meant keeping consumer goods, IT, and some of the private banks, and that's really where we've placed our bets and raised the cash levels in the fund, just to wait for this kind of rainy day or stormy day, whichever you want to call it. So we're ready, but as I said, the problem is with so many rumours and which are more negative than positive at the moment, it's worth just sitting back and just waiting for the dust to clear a little bit. As I said, when regulators come and say we're going to calm the markets, it tells me that there's something they need to calm the markets for.
Okay. Last question then, Andrew. Is there anything that you are adding now on the short side since you have an AIF?
No, not really, Anuj, because it's you're seeing that anything can change, as we saw on Friday. So it's not worth, I think, kind of going aggressively short at this stage. I think we'll just keep our hedges high, which we have done anyway. So with a smaller amount of money being deployed, that's how we want to play. You see, I still worry about global factors as well, and one of the things that just concerns me, we can talk about the US and everything else, but the Chinese market's down 25% this year, and I'm a great believer market tells you or knows something more than I do. So the economy is doing well. Nothing has changed for them, apart from maybe trade wars, but even that has propelled the US market. So why not China? So there's something missing, I think, from the global trade. And the one thing about debt, which I want to mention again, is that I think most people have forgotten what short-term interest rates rising mean for problems in the debt markets. And the corporate debt market in the US, BBB, is $3 trillion. That's a scary number if things start to unfold there.
Yes, it's not so big in India, and even then, look at the scare it has given in just a day to even the equity markets, not to speak of complete illiquidity in the debt markets last week. Well, let's see if all these statements make a difference at all. Thank you very much, Andrew Holland. Always a pleasure speaking with you, and thank you for joining us this morning. Okay, we have been speaking about debt markets beginning to sulk and not refinancing. So let's ask someone who knows this market and who dips into this market. R. Varadarajan, Managing Director of Repco Home Finance, has joined us now. Good morning, Mr. Varadarajan. Thank you very much for joining us. Have you looked, how much of commercial paper do you have, and when do they come up for redemption?
See, if you see our liability side, we have 82% or 83% is only by bank borrowings. Our dependency on the market borrowing is very, very less. It's only around 17%. Even in that 17%, our CPs are less than 10%. And they are all coming for maturity probably in the next 2-3 months. But as far as our liquidity position is concerned, our ALM is very robust, and we review it every